How we doing, traders? Welcome to another stock market movers. We got another great show for you guys. We're going to talk about stocks in limbo, what was hot and what was not today. We'll get into some crypto news out there. The USD and the euro, what's going on? Pepsi earnings, we'll talk a little bit about Peloton, Gap, Walmart, Canoo, Rivian, Boeing today. We got a lot to get into. Like always, we're going to go ahead up and put up the topics here so you guys can see what we'll talk about throughout the show. And we got our experts. Not only do we have two, but we got three for you today. So smash the like if you guys are excited to get into the expert interviews. We got Luke Lloyd at 115. That's Wealth Advisor and Investment Strategist at Strategic Wealth Partners. We got Matt Kohrs, Market Strategist and Retail Trading Commentator. And we got Louis Navellier, Chairman and Founder of Navellier Associates. Those will all be coming in succession. So I'm going to do my best to get through all the headlines today. Smash the thumbs on up and welcome to none other than, of course, Stock Market Movers with your host, Money Mitch. Let's go ahead and dive on in.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.
All right, traders, welcome to it. Stock Market Movers, where we touch the headlines and get to the experts that you guys want to hear from. Let's dive on in. We got a lot to talk about, so you guys see the topics there. We'll dive on into the overall market. The stocks are in limbo right now, as you guys can see. A lot going on. Lately, we've had technology come up, then come down. You guys can see this in the Qs today. Definitely a little fake out to the upside. We'll see how the day ends, but it's just been a lot of limbo right now. And a lot of this dependent on what? Of course, the economic data that we're on the heels of, which is the CPI data. That has investors just watching out to see what happens there in wait and see mode. So we'll see if stocks can get off of this, or do they come down a little bit before we get our CPI data that should be coming out tomorrow. So pay attention to that. We'll see what happens there. Financial services were leading us actually from the open. If you take a look, a lot of these stocks kind of getting a leg on up right now. We can take a look at some of the kind of the global bank ones and see how those are performing. But a lot of this, I think, has to just do with a run into earnings. So if you take a look at DPM, it's having a nice day today. Look at that 15-minute chart, really trying to hold back above the 115s. We'll see if it can close above there. Stocks like Goldman Sachs taking a little bit of a push there, getting up there towards the 299. We'll see if it gets to the 300 handle today. And then stocks even that will be having earnings on Friday, like BlackRock. Watching this stock and asset management pushing on up. So it's a lot of these. You also had PayPal having a good day. You got Citi having a good day. And so what does this show me? More and more how maybe some investors are looking to play these going into earnings, and then potentially the earnings themselves could knock these down. We'll see what happens if it's kind of a run into earnings and then selling into it. But like always, financial services are important to keep on watch, especially the beginning of earnings season. Let's go to the next topic here. We're going to talk about basic materials, finding some light in steel here. It started pushing back. You can look at Nucor today, having a good day there. U.S. Steel having a good day there. You guys know how I love my X. We'll see if X is going to give it to me or not, but had a great day today. I was looking for a nice push. VWAP was holding really well on this one. 1750s could have got you that nice push towards the 18. We talked about that one on live trading. Cleveland Cliff, nice day also here, pushing on up. We'll see if these can continue. If you take a look here, it is the leading industry in basic materials. We'll see if this can kind of keep pushing, as basic materials not doing too bad from the open. Looks like industrials are also starting to get strong there. And what's strong there is our next topic here. This is why it's important to know what was hot and what was not, and where the rotation is, right? That's what we always want to be on top of. the rotation. So if you guys saw today before the open, I was looking at Delta Airlines for a little bit of a push. Why? Because they have their earnings tomorrow before the open. So we were watching to see if these could catch a bid. And you guys can see here, American Airlines actually led the day here. And so that was the first one that gave me the signal. Yes, I could take a look at DAL, but it wasn't only American Airlines that had a good good day today. UAL had a really nice push up there towards the 38s. Also, Delta Airlines, right, ahead of the earnings, getting that nice little lift. I played this play today. I'm all out, full disclosure, but keeping a watch to see how these continue. Of course, the airlines are going to be very important. What do we get from Delta tomorrow before the open? I think a lot of investors will have all eyes open. Let's keep going towards the news here. Now we're going to touch on the oil trade, and oil trade has continued to fall off here. I'll show you with XOM. And one of the things that at least I'm seeing is some sideways action here off the bottom. If you can see off the daily, we have some sideways, but it is looking like it wants to break that 83. We'll look to see if we reverse, right? I'm really going to talk about it with my guests later on to see if what they see in oil. But like always, smash the thumbs on up. We'll continue to watch if this oil trade comes down. I was watching earlier in the day. This is, of course, a little bit of a leverage trade, but I was watching Drip early on in the day. You can see this pushed on up. We'll see what happens in oil and if the trade continues to fall off on fears of global shutdown, a slowdown. All right, let's go towards the crypto news. The crypto news is interesting. I don't know if you guys caught, but lawyers representing the hedge fund 3AC creditors say that they don't know where kind of the leaders are right now. They're currently unknown. And this is more and more showing me that we've had the red flags in the cryptos. And I think this is important to watch. I'm not changing my outlook on crypto. I think right now it's in winter period and we need to kind of take it easy, really see who comes out of this with great business. A lot of this you're going to see. I think we're going to still continue to see some of these platforms have issues. And so we need to learn from this, understand it. So when the next wave comes, you can be a part of it and not get caught in some of the schemes that were out there that was put on by the latest boom in crypto. All right, another thing that has been happening, I don't know if you guys are watching, but of course the dollar has been ripping. The dollar index has been on fire this year, rising about 13%. Also, what's happening here is the euro is hovering close to parity with the US dollar on Tuesday. We'll see if this kind of continues, but that does make me a little bit bullish on one thing, traveling maybe to Europe. I don't know about you guys. Every time I went to Europe, I lost money. At least I felt that way because of the exchange. Not the same right now. So who knows? Maybe we see a little bit of international travel pickup from that. Let's keep going towards the next headline here. We're going to talk about Peloton. Peloton, let's take a look here. I actually took a little scalp on this today, so just want to give you guys that set up there. Let's take a look here. Peloton, it did do a nice little push. I got in there for a little 924 to 950 trade. Got out right before the 950. I'm going to watch to see what happens on Peloton here as they exit their own manufacturing and expand into third party with a partnership with a leading Taiwanese manufacturer, Rexon. So keep this on your radar. What they're trying to do is rechange kind of the structuring and the cost, trying to help their outlook here. We'll see if this can really kind of push the stock. It did push it in pre-market there to the 960s. Of course, this is right off the bottom here. So we'll see if this can actually start making its way up. I really wouldn't be bullish longer term on this stock unless it can make a move back above 12 and get some kind of change, some catalyst. Maybe we get some better earnings from Peloton in the quarter. All right, let's go ahead. In a second, we're going to be getting into our first interview. Do want to touch one more topic here. Let's touch a little bit of Gap's situation here. So Gap CEO stepping down effective immediately. So let's see how GPS is trading right now. Let's take a 15-minute outlook. Looks like we're getting a little bit of a bounce there from the pre-market action. We'll see what happens in Gap. Now, one thing to note is Wells Fargo's are also stepping in here and downgrading to equal weight, lowering price target to $10. I mean, at least the price target is above the price where you see it now. But they did anticipate Q2 fiscal 2022 adjusted operating margin percentage here to be 0 or slightly negative, and says that it continues to navigate margin headwinds. This is what we've seen in a lot of earnings reports. So I think we need to keep watch of this, right? Mentions of margin headwinds. Their margins are just compacting. And with that, we need to watch what happens for the rest of the earnings as we're really diving into earnings season. All right, let's go ahead. Let's get out of the headlines. We're going to take a second. We still got a lot to talk about. When we continue on the headlines, we'll get into Bill Ackman, or as I used to like to call him, Bill Spackman, but definitely getting out of the SPAC game there. We'll touch a little bit about Rivian, Walmart, and Boeing coming on up. But first things first, let's get into our interview today. We're going to get into it here with Lloyd, wealth advisor and investment strategist at Strategic Wealth Partners. So smash the thumbs on up. We're going to play a quick trailer and bring on Luke.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
Best investments you can do in your future is actually go and re-educate yourself on credible sites and credible resources like Benzinga. You guys have been killing it.
The comment section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
So I love about you guys, you just had all your callers in right then. And it's all about the community here at Benzinga.
All right, let's dive into our first interview here. Luke Lloyd, wealth advisors and
hey, Mitch
at Strategic Wealth Partners. Welcome to the show, and welcome.
What's up, my man? How have you been?
Hey, I've been great. I've been watching this action, trying to stay with it. Now, I'm sure you're staying with it closely, and so that's why we're having you on here. The first thing I want to do is, we're really starting to kick off earnings season. How do you feel about earnings leading into kind of the banks on Thursday, really kicking things off?
Not good at all, Mitch. I wish it was a different story, and I wish we could be talking like we were a year and a half ago with growing earnings and with all the stimulus money being pumped in the economy, everyone was making money. Now it's a totally different story. And the thing that concerns me the most is the only reason that the stock market has dropped so far is because the multiple that we put on stocks, right? So the stock multiple on the S&P dropped from 20 to 22 times earnings all the way down to 15 times earnings right now. And the thing that hasn't dropped, the thing that hasn't been discounted is the earnings. The earnings estimates haven't dropped at all. It's still estimated that earnings for the S&P is going to be $250. It's dropped from $252 at the peak, so it's barely even budged. And then 2022 earnings estimates have barely budged as well. So I think a lot of investors are going to have a big rude awakening over these next few quarters as a lot of these companies guide down on their earnings and they don't come in where a lot of people expect. So when you actually put the multiple, maybe a 14 to 15 times earnings on a lower EPS amount, you get closer to 3,000 to 3,400 on the S&P 500. So that shows you we probably still have 10 to 20% more to go on the S&P 500. The only saving grace is if earnings somehow come in stronger, but I don't see how that's the case in this kind of economy. I think we're entering probably a recession, and people are living off of debt right now. They're spending money still, but this can't last forever.
Yeah, I'm starting to realize that investors are really feeling like they're in a pickle here, right? What do I do? Do I look for a high-risk investment in a high-risk environment, or do I lose out 10% to inflation? How do you see this situation, Luke? What do you think?
That's the big investor's dilemma right now. I mean, this is an environment we basically haven't seen throughout history. And this is the reason I think this situation that we're seeing right now is actually worse than the 1980s. We always compare what's going on right now to the late 1970s and the early 80s. Well, if you look back to 1981, inflation was at 10%. Mortgage rates were at 16%. So yeah, it's a lot higher than it is now, but CDs, the risk-free rate, was actually paying you 16% as well. So you could go save money in a savings account and make more than inflation and hedge against your mortgage rate. Now, inflation tomorrow is probably going to be coming in at 9%. that's kind of where the estimate's at. Mortgage rates are like 6%, right? And then CD rates, the risk-free rates, like at 2%. So, you save your money in your savings account, you're losing 5 to 7% of inflation. And then the stock market, like we talked about before, most likely has lower to go as well. So this is a big investor's dilemma right now that a lot of people are wondering, where do they put their money? This is not the environment to take on a substantial amount of risk. So I think the answer is somewhere kind of in the middle. You don't want to take on risk, but you don't want to have on zero risk, right? So I think cash over the next 6 months is probably a pretty good place to be. It's not good for much longer than 6 months because you're losing a lot of purchasing power, but I think you can still capture maybe 5 to 15% more on the downside safely and start putting your money to work in good, strong cash flow companies, low debt. That's the key right now, is low debt, in stocks that are trading lower than their historical averages. A lot of stocks are, but you have to make sure all three are going together. So I think that's the environment where you want to look at, and you want to start nibbling slowly at quality, but you've got to have some cash on the sidelines at this point. There's no better alternative.
Perfect. There's two things that I've been hearing consistently is good cash flow and growing revenue. Is there any stocks out there that you can think of that kind of fit this headline?
Yeah, so one stock we just picked up is a stock called Omnicell, ticker OMCL. Essentially, their equipment eliminates human error when it comes to pharmaceuticals. So that takes away a ton of risk from pharmacies and frees up pharmacist time to do other things within the pharmacy. So it's a big value add to a lot of pharmacies. So the equipment's actually measuring the dosages of the pharmaceuticals, and they're actually delivering it basically to the customer, right? So the best part is that they have reoccurring revenue, and this is the environment where we've been in for a while, and we're going to stay in. Is that you want to look at companies that have that reoccurring revenue component, especially the environment we're entering, which is an environment where a lot of people aren't spending money, and small businesses are hurting more than ever. I mean, we saw small business optimism come in the lowest it's ever been today. So you want to look at companies that have stickiness, that have that reoccurring revenue, and this is one of the stocks. Again, quality stock, strong cash flow, low debt, growing revenue still in this kind of environment, and has a cheap historical valuation. That's the name of the game.
All right, lastly here, who do you think wins the battle? How do you feel about Twitter and Elon? Who comes out like winners here, Elon or Twitter, or maybe both?
So that's a great question. And a little bit of side story, I'm a big Elon Musk fan. I think he's probably one of the best capital allocators, the best innovators, and one of the best business owners and businessmen of all time. So, I think Elon Musk always has a method to his madness. There's not, it's not just, surface level that he's thinking about. It's always deeper, right? So there's a couple reasons why I think Elon Musk probably will go through somehow with the Twitter transaction. I know that's probably a very low chance right now, but I think Elon Musk will still acquire it for two reasons. I truly do think he wants to promote freedom of speech and wants to limit, restriction in companies not restricting what people say on these platforms. I think he truly does believe that and wants to give people a voice. And number two, this is a huge business opportunity for him. It really is. I mean, all the data, all the things we say on Twitter. I mean, just think about Neuralink, think about Tesla, all the things he wants to do. He's thinking of so many different businesses that he hasn't even created yet that he can utilize Twitter's data and Twitter's platform to help his future businesses, right? So I think it's going to go through. Probably pretty unlikely, but I'm a believer.
Hey, so in my eyes, I think that's both becomes a winner, right? Because Elon gets what he wants, and probably Twitter gets what they want too, right? A better business.
Elon gets what he wants because he's one of the smartest guys out there, and he's not afraid to say what he wants. I mean, that's the key there. Is he's not afraid to say things. It puts a target on his back. That's why a lot of people don't like him. But I like when you have a guy that's tells it how it is. That's what I try to do.
I'm with you. Bet on Elon versus bet against him. It seems like it's better to bet on him. All right. Thank you. Like always, Luke Lloyd here, guys. Wealth advisor, investment strategist at Strategic Wealth Partners. We'll love to have you back and see you next time, Luke.
Looking forward to it, man.
All right. That was our first expert there. I hope you guys enjoyed us talking a little bit about the earnings kicking off. Definitely keep on watch. Buybacks. What happens there? Do you see kind of more and more mentions of margin headwinds in the earnings? We'll keep watch to see what happens in earnings and, of course, what happens in the Elon Musk bot battle. Let's keep going. Let's take to the next headlines. I told you guys we would get into them. Let's dive into this. Next one I want to touch is, of course, on Bill Ackman canceling Pershing Square. and returning $4 billion to capital to shareholders, right? And this goes into the SPAC saga, right? I was big on the SPAC saga because I had SPACs Attack, one of the best SPAC shows there ever was and probably ever will be, because I don't think we'll go into this boom again. But hey, I'll definitely go ahead and give myself the name there. And we watched a lot of these kind of opportunities present themselves. We talked a lot that these were opportunities, and clearly here, Bill Ackman did not find the opportunity to take it public, unable to get a suitable transaction. They tried to make a really complicated deal, and that didn't work out. So, hey, just shows us more and more how we always got to be careful when we're getting into risk assets so that you don't get caught in putting all your eggs in a risky environment with a risky stock, right? I think that's the important thing, is always know the environment you're in. In the times where we had SPACs ripping through the roof, that was the embodiment of the buy the dip moment. And at that point, a lot of stocks were making easily 30 to 40% moves to the upside. And do we see that anymore? No, very hard to see that, right? And so always understanding what market environment you're in is very important. All right, let's keep going. Let's get into the next headline here. I want to talk about Walmart's headline. I thought this was really important today. Full disclosure, I have been long Walmart. I talked about it yesterday, so it wasn't because of this headline. But let's take a look how that chart's looking right now. Walmart and Canoo, right? And so first I want to take a look at Walmart. We're up there towards 125.84. As I've talked about how I just want to see a close above 125.50. That will give me that bullish sign to continue there in Walmart. But let's take a look at one of the biggest movers today, GOEV, Canoo, moving on this as Walmart purchased 4,500 of Canoo Energy electric delivery vehicles to be used for last mile deliveries in support of the growing e-commerce business. So this just gives it more support that you're going to see more and more of these kind of vehicles get purchased, right? I think you can watch to see other names like Arrival. We have been seeing some cheaper names make a lift as of recent, like FFIE has made a big push. I saw Polestar setting up for a bullish move. So just keep these on your radar. Do I feel that GOEV is going through the moon right now? Not necessarily, but it's one to keep on watch. I've talked about the 50% retracement level on this stock. So GOEV, I talked about into the 370s and 360s is what I'm looking for to catch the bounce there. So that'd be about 50% retracement from the pre-market move. We'll see if we get on over there in GOEV and see that pullback happen. All right, let's go ahead. Let's get into the other headline in the EVs, which was Rivian. Let's talk about Rivian here, trading lower amid market weakness, and also reporting that it plans to cut 5% of its workforce. And it's these jobs cuts are limited here to non-manufacturing jobs. So also stating here that it's not, big roles. It's kind of maybe some office people that will be getting kind of the cut. But of course, this definitely is something to keep on watch as we've seen continued layoffs. Let's take a look here at the daily chart of Rivian. You can see that bottoming on that 2490 still holding. For me, I feel like this pack of volume, whoever got in on this big day where you have these big volumes, I think there's someone hanging out here. And it looks like to me like it's more like institutionals. And every time you're pulling back near this line, there's some nice little volume increasing. So that shows to me that you're probably getting somebody to add to their position. Of course, this is all psychology and no one knows for sure. But I think that they're setting up their longer term in Rivian. And as long as you can hold right now that 2490, or maybe you can lower it down to 24, I think this is actually starting to look interesting for the long term if we can actually get a wave up in the markets. Of course, if we continue seeing downside, could just get continued dragged along. We'll see what happens with Rivian and really if it can get off the ground. All right, we do got a couple more topics to talk about. It looks like we got about 3 minutes to get into our next interview, so I might be able to sneak it on in here. Let's talk about Boeing here. Boeing having a great day. I was talking about how if we can get a close above 146, you start pressuring out of this bearish pattern here. It had a bearish pattern. Been talking about it. Really needs to close above 146. Today we're up there towards 148 right now. We'll see if this can continue to run. Boeing here jumping after reports of deliveries have reached the highest monthly level since March 2019. Boeing delivered 51 airplanes in June, totaling 216 jets during the first half. So at least in the short term, it got a little bit of a lift there. Not bad move there off of the 138s up there towards 148, up about 10 points on the day. We'll continue to watch Boeing to see how this reacts. Of course, we talked about the airlines having a nice lift today. We'll see if that can also kind of remain after the earnings of Delta tomorrow. All right, that's going to do it for our headlines here. We're going to go into our second interview today. Definitely smash the like. Seeing a lot of people jump into the chat. PSNY is a good SPAC. Yeah. You know, one of the things that we might want to start doing is trying to call out anything that's a SPAC. If it's de-SPAC, just call it the company, because there's too much connotation with that word, right? And I saw this actually in a big part of this is why SPAC's attack ended, right? Companies don't want to be referred to that word SPAC anymore. Why? Because there are some companies that have made it look bad for others out there, right? And I think that's the important thing to keep on watch. Maybe we kind of don't use that wording as often to talk about de-SPAC. They're just public companies with a high growth outlook that we really need to watch how their the expectations that they put out on their investor deck, does that meet what is actually coming into their results in their earnings? That's what I'd tell you guys to keep on watch if you're looking for opportunities in the SPAC market. All right, let's go ahead. Let's get into our interview here. I'm going to play a quick promo, and then we'll be back on with none other than, of course, Matt Kohrs, market strategist and retail trading commentator. Let's jump on in.
Introducing portfolio synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protective connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, let's go ahead. Let's turn it up and bring on Matt here. First, I'll just play a little trailer, get him started. Guys, give me some thumbs on up in the chat. All right, how we doing, Matt? Welcome to the show.
Happy to be here. I like that, the little rockets with AMC. I thought that was pretty cool. How are you doing today?
Hey, doing great. It's great to have you back. I know that you've joined me once on Money Mitch, but I definitely wanted to bring you back, and we'll definitely come to you. And you know, one thing I definitely do think that you stay up on is the retail trends. And I think that's so important, because a lot of us traders, at least the Benzinga audience, is those retail traders. So we want to continue up with those trends. So I'm glad to have you on today, Matt.
Happy to be here. And yeah, I mean, obviously, as you well know, Mitch, it ebbs and flows. Of like, you have periods of expansion, consolidation, and right now, just obviously, it's fun to see AMC and GME doing well. I believe they're actually two of the few green ones on the day. But even in terms of the overall market, I mean, CPI report comes out. There's just a lot of volatility. So as a retail trader and an investor, these are fun opportunities. I feel like a lot of time there's like doom and gloom of like, nope, it's going down. Like, you got to stay away. When in reality, you're a bit more active. You need these big moves to make the big money. So I think it's more exciting to be retail than even when it's like the whole melt up thing, that whole period. It's like, yeah, it was easy, but it was like small stuff. And now, I don't know, I'm having a fun time.
Hey, you know, one thing I can tell is you don't shy away from competition and a competitive environment, and we're all here for it. I mean, yeah, it's always great when everybody's winning, but really trading's about how you can get through those down waves, right? Because the up waves, I mean, everybody's riding the wave. But if you can hang out and survive during those down waves, is what really keeps us going. Let's 100%. Talk a little bit of overall market here first. I want to take a look. How's your overall outlook on, let's say, like the SPY? Do you see us bottoming? And what would you take to really kind of call a bottom out there in the overall market?
Oh, awesome. Yeah. So in the short term, my prediction is just crazy volatility. The smaller your time frame, the more randomness is going to be involved, especially if you're watching this live. I mean, Wednesday morning, 8:30 a.m., an hour before the market opens, we get the CPI report. So basically, this inflationary gauge that the Fed will definitely be using at the end of the month for the next FOMC meeting, it's just going to be crazy volatility. And they're expecting a number that is sky high. Right now, the expectation, the line in the sand is 8.8%, which is ungodly high. That is hot inflation. If we come in crazier, hotter, the market, the volatility, it's already going to be crazy, but it's tomorrow. Just be ready. The pre-market, it's going to go bonkers. That's my prediction for the short term. I think in a little bit more the medium term, couple weeks, couple months out, I do think we're going to go lower. And I'm kind of watching some of these key levels around 850, 855, 860. That's where I'll personally be adding to my long-term portfolio. Every little bit we drop, I'll add a little bit more. But once again, that's long-term stuff. So even if it falls a bit more, that's all right, because I'm planning on being those particular equities for many decades to come. But my reasoning for that of why we're going lower is just inflation's very bad. Most likely at the end of July, when we get the preliminary numbers for Q2, it'll probably be officially in a recession. And right now, just what's going on with Europe, Russia, Ukraine, there's just so many unknowns. And really, a lot of those unknowns, when they become known, probably even more bearish than we'd expect. But once again, I just think this is an opportunity. If you're an active trader, great. The volatility is there. Hopefully, you can catch all these trends. And if you're long term, I think it's just a game of patience and wait for it to bottom out. And to answer the last part of your question, like what would be the bottoming signal opposed to just the price action obviously starting to bounce? I think it'd be one of two things. Probably a series of inflation reports that are finally coming down, showing that the Fed has done what it needs to. And on the other side of that, it's just with the Fed maybe stopping the raising of interest rates or maybe even bringing them down. But that type of interest rate stuff, I don't think we'll really see till 2023. So I think the first real signal is actually inflation, hopefully one of these days, sooner rather than later, dropping below 8%.
I know I won't be mad at the pumps, but do you feel inflation numbers will come in hot? I mean, everyone has their eye on the CPI data coming tomorrow. The expectation is 8.8. Do you see it coming in hot? Do you see it coming in lower than expected?
Yeah, I mean, that number is so, like last time it was 8.5 and everyone got surprised because it came in at 8.6, and now they're drawing the line at 8.8. It's so high. So like my gut is saying, no, like how could we possibly be above that? But then recently the White House put out a statement of expect very high CPI. And I'm like, well, I know they do that every single time we get the CPI report, at least seemingly recently, that's what they've been doing. I don't know. Like if it comes in at 8, 9 or 9, like this is just going to be so wild. It's obviously possible. And if I'm reading it and maybe it's a little pessimistic, like, I mean, things are expensive. I know energy is coming down and commodities are finally coming down, but that's a little bit, I don't know if the economy has felt it yet because that's a little bit too far upstream. I think we come in line at 8.8. I'm going to throw that out there. That's my guess for anyone watching. My guess, the Kohrs guess is 8.8. And I think the reaction to that will be a bearish reaction. That's what I'm going to put out there. We'll see if we'll find out tomorrow if I'm right or wrong.
Hey, I like the added extra there about maybe getting a bearish reaction off of an inline number. We'll see what happens there. Now, what stocks do you feel retail traders' interest is really leaning to right now? Is there anyone that you see that's just getting more of the attention?
Yeah, so in general, there's always like just the biggest gainers and losers. I feel like people just have up the screeners for that. But day over day, where we see that continued thing is really where I kind of got my birth into even how this conversation started way back when. And what I do is really through AMC and GME, which I just think is awesome right now. The market, there's a lot of questions about it. And then yet AMC is up 6.4%, GME is up 6.8%. Right now, they have elevated short interest. Both are right in the realm of 20%. So day over day, whether it's Reddit, Twitter, YouTube, just social media, there is still clearly that massive community behind the two. So it's always interesting to see how that will or won't play out. Recently with GME, we had the launch of their NFT marketplace. NFTs, because of crypto, have been taking a little bit of a hit lately. But when we get the rebound in equities, I expect a rebound in crypto. And what I really like about GameStop's NFT marketplace is I just think NFTs will be a natural fit for gaming. So I'm excited about that. And then on the flip side of that, we have AMC. I don't know if you've been to the theaters lately, but Top Gun crushed it. Thor's been crushing it. In terms of the box office, I think we're at 4.2 billion on the year. And for all of 2021, we were just under 4.5. So our pace is going really well. And then also Adam Aron, he recently tweeted out, the CEO of AMC, of this past weekend. It's just a huge success relative to 2021 and even 2019 pre-pandemic. So I know a lot of people who do classic fundamental breakdowns don't want to hear that much about it, but I'm here to kind of argue. I think value, before the rise of retail, it was so much of value equals fundamental value. I think the equation's a little bit more complex where it's, yes, fundamental value, that's important. I'm not saying it isn't, but I think there's an aspect of community value. And I was recently having a conversation where ownership of either of these two, it can almost be thought of as like a collectible. You're part of this thing, so it has a little bit more than just like equity ownership in the company. And I know classic fundamental breakdowns, those types of people are not going to like this at all. But in reality, it's the price action and it's the exact price of the equities that's the end result. So if you think it's fundamentally overvalued, well, that's where it's trading. So I don't know what else to say.
So what I would say about that, and just to kind of do a quick answer on that, is I always say that there's three variables that affect stocks often. It's technicals, fundamentals, but there's also one more. There's the story, right? And the story can really take hold of stocks. That's what we saw in, I think, 2020, is the story become the forefront. So then what happens in story mode is we're always looking at that forward growth outlook, right? Because that's what drives the story, right? The growth outlook. Let's talk a little bit about what we've been seeing. Definitely the box office are coming back right now. So summer box office season has really turned some impressive numbers. We're starting to see people come back to theaters. Was the call for the death of the movie theaters exaggerated here? I'll go to you, Matt.
I mean, the numbers you're referring to, it's already at 4.2 billion on the year. We're clearly outpacing 2021. We're clearly outpacing 2020. And I say give it a year and we'll actually start beating the 2019 numbers. Purely those fundamentals of are people going to the box office, it's getting bigger and bigger. So the death of movie theaters, it's simply not true. Like, it really isn't. The numbers are showing in. I mean, I guess people can have like opinions of it, but if the opinion is that it will die, like the numbers are the exact opposite. So I would wholeheartedly say clearly there is no death of the movie theater experience.
Now, one thing that we've recently seen is AMC's CEO has taken on the short sellers on Twitter with hashtag choke on that. Also, a tweet went pounds. Do you agree that the CEO being active and taking on some of the short sellers on social media, is that a good thing for the company?
I would say it's actually kind of twofold. So I would really lean towards yes, because even alluded to what you were just saying of the part of the story. So if the CEO is leaning into that, it's just really bolstering the value of the story, and it gets the entire investor base like fired up and people are excited and they feel like he's fighting for some of the cause. But on the flip side of it, and I'm obviously no lawyer, SEC expert, but also before when he's tweeted things and tried to talk about it, when the Highcroft deal was going down, he was going to go on CNBC, and then he's like, oh, I can't because my lawyers have advised me against it. So it seems like he has a team around him that gets him to stop when he should appropriately be stopping. But just from an onlooker, of which I am, like, it is exciting. And I think you see that in many CEOs. Like, people get excited about Elon talking with Tesla, Warren Buffett with Berkshire Hathaway. So I think it's kind of a classic play out of the playbook of more of these, not really celebrity, but more of outspoken CEOs, if you will.
Yeah, definitely has been on my radar lately that I've been seeing more and more turning away from hearing mentions of in theater and at home, right? It's just going more and more into the theater, back towards that strategy for the movie production studios. I think that's something definitely to keep on watch. The last question I have is a little fun one for you. What has been some of your favorite movies in 2022, or maybe something you're looking forward to watching?
My favorite one this year was Top Gun. Definitely. I don't know. I rewatched the first Top Gun and I really enjoyed the second one. I just saw Thor, Thunder and Love, Love and Thunder, whatever it is. I thought that was good. I think everyone should see it. But in terms of the Marvel universe, I thought it was a little bit more in the center. Like, it wasn't a bad one, wasn't a good one. I thought Ragnarok, in terms of the Thor series, was like a little bit better. I really enjoyed it, but I'm going to have to go with Top Gun for at least thus far in 2022.
Well, thank you for joining me like always, Matt. I appreciate you coming on and covering not only AMC and GME, but also talking about the overall market. What do you see in the retail community? We'll definitely come back to you. Appreciate you coming on.
Thank you. Appreciate your time. Talk to you soon.
Definitely, Matt. All right, guys, there you go. We talked some AMC. I did see you guys getting into the chat there, getting a little excited. I'll keep on watch because I have seen this stock have some strong last couple of days. There's a reason why I called Matt, right? And I looked him up and, I said, Matt, we got to have you back on. I've been seeing AMC have a couple of days where it's trying to hold above 15. Today, we clearly held that 15. Nice little push there. We'll continue to watch what happens on this. Also, GME, right? Holding that 130. I was watching that level to see if it was going to break down. It did a couple of fakes to the downside. Now recovering that 130 and really holding that. That's the level that I would watch on GME towards the upside. We'll see what happens with these. If they can make another run or not. Like always, it's always about, at least in my look, if you're looking at like day trading action, doesn't necessarily always matter about the fundamentals if you're just trying to get that day trading momentum. So it's up to you to determine what you like out there, but definitely not a bad day there for AMC and some of these names. All right, let's go ahead. Let's take a look at what our last headline is. I think we got one more to touch before we get into our interview. One thing that I wanted to talk about is Pepsi. So let's go ahead. Let's dive into Pepsi's earnings before we get to our next interview today. So let's go ahead. Let's bring it on up, Pep. All right, here's the chart. You guys can take a look at it. The earnings per share coming in here at $1.86 adjusted versus $1.74 expected. Revenues were at $20.23 billion versus $19.51 billion expected. The company did mention, though, that the company's margins shrank as it faced higher freight and commodity costs during the quarter. Of course, you're seeing that oil rise. That's going to affect the freight kind of costs there. But we're going to keep on watch to see what happens in Pepsi. They also talked about how it's accelerating the cost management initiatives. I want to talk about that with our next guest, so we'll dive a little bit deeper into Pepsi. But something to keep on watch also was they did raise their fiscal year 2022 revenue growth. The company now expects to deliver 10% of organic revenue growth versus the 8% that it had guided to in the past for the fiscal year 2022. We'll keep on watch what happens with Pepsi, really just kicking off the earnings for the earnings kind of calendar for us. As we continue to watch, we'll look to see what happens in defensives. Not a bad day for them overall. Let's take a look here. Up about 0.64% from the open. If we take a look at just software, beverages, soft drinks, not having a bad day. We'll see what happens later on. How does this affect Coke? We'll go ahead and ask it with our guest coming on up. Definitely, guys, smash the like as we continue on today's show. We're going to get to a promo here, and then we'll go ahead and dive on in with our next guest.
When you want to maximize your performance in the market, you need access to the highest quality tools and news available. Benzinga Pro stands out from all of the options you'll be presented with, and their instant access to market-moving news positions you to be prepared to take on the market in the best ways possible. Here's how it works. Benzinga Pro's news desk creates original news content that's available on your main news feed and gives you actionable information about companies you may want to invest in. This news desk information gives you the chance to beat the market, receive impactful news as it breaks, and jump on trending stocks before and as they rise. And beyond that, Benzinga Pro is packed with helpful features and unique insights that give you the best information possible. There's tools like the Live Audio Squawk, which streams every day with important news and timely updates. And the real-time news alerts that allow you to stay on top of every developing story you're keeping tabs on. Alerts and news will be sent straight to your inbox or delivered as live sound alerts. For those investors that want real-time, actionable, and breaking news about companies they may be looking to invest in, Benzinga Pro is the tool to use.
All right, let's continue with our experts here. Bring on Louis Navellier, chairman and founder of Navellier Associates. Welcome on, Louis.
It's good to be here.
It's good to be here, definitely. Let's dive on in. We just talked a little bit about what we got, at least from those Pepsi earnings. What did you see in that earnings report?
Well, their sales beat by 2.3%. The earnings beat by 7.5%. Everything looks really good except Europe. Europe sales were down significantly. Now, the company raised their guidance and implied that their organic growth is strong, so they don't have to worry about currency. But the drop in Europe sales might have been due to the currency risk, because obviously the euro is at parity with the dollar today.
How do you feel about defensive names coming forward after this report?
Well, clearly the consumer is still spending. Obviously, they want their chips and soft drinks and packaged
I
food.
like my Doritos.
Yeah,
Can't blame that.
Exactly. And their international products are selling better than the U.S. products, believe it or not. They expect about 20% organic growth there. So I think it's a good sign. They keep saying we're in a recession, but for some reason we're creating jobs. We're not in an earnings recession. Earnings are still growing, even though the year-over-year comparisons are becoming more difficult. So when they raised their guidance today, that really helped the whole market.
Something that I've been watching is the oil trade really coming off. It's been coming off for, to say, more than a month now. Is the energy trade gone here, or is it just stabilizing?
Oh, not at all. The energy stocks are going to have the best earnings for the next 3 quarters. So what's really going on is we are energy independent again. We're at about 12.1 billion barrels a day. That's only 200,000 barrels a day less than 2019. OPEC didn't produce quite as much as they promised. We'll see if Biden can get them to nudge them later this week when he's in Saudi Arabia. But I think demand's down. I mean, obviously prices at the pump went up. People change their behavior. They're not visiting national parks and things like that. So what's happening is we got demand down, we got supply up, but energy is always firm in the summer months. There's more people in the northern hemisphere than the southern hemisphere. So your real price break in energy is probably going to wait till September, October. But the energy stocks they're poised to just have all their earnings. I mean, they have the dividend yields, they got low PEs. They're just going to come out with more record earnings and drive those PEs lower. And I'm keenly aware of the profit taking that's been going on, but I think it's overdone.
I agree. And like I mentioned earlier in the show, I said maybe, don't bet against Elon. But one thing that I definitely don't bet against is Warren. So definitely I wouldn't bet against Warren there. How do you feel about ending the year here? Do you feel the Fed will flip if we start really seeing some signs of inflation letting up?
Okay, so we have the CPI tomorrow. Okay, and there's been a lot of negative news. It's going to be running close to 9%, et cetera. But the main thing is the core rate is falling. It's been falling since March. It was 6.5 through May. It was 6. Their forecast will be 5.8 tomorrow. The personal consumption expenditures index, which is what the Fed looks at, is running at 4.7, the core rate. So I'm very comfortable and confident that inflation is cooling off. You just see it in this commodity crunch we have. Because see, when the dollar goes up, it drives commodity prices lower. Commodities are priced in dollars. It's as simple as that. And so now you have bond yields falling so fast that the yield curve's actually inverted. So the Fed that's going to cause the Feds to hesitate. So I do expect 75 basis points at this month's meeting. And then at the September meeting, they'll do 50 or 75. And then they'll be in sync with market rates. And then they won't raise in November because it's a week before the election. And then if they have to fine tune it, they'll do it in December. But they've engineered a soft landing because, again, we don't have an earnings recession. We don't have a jobs recession. So it's a very, very odd environment we're in. The first quarter was even weirder because they said that GDP drop was due to a big drop in productivity as well as some trade issues. So, I don't know who's doing the numbers, but I'm suspicious.
Definitely. I mean, we've been seeing the job. I was looking at it. I was like, are we finally going to start seeing some weakness show up? But not what we're seeing here. Now, the last question I have for you, Louis, is where can we find some longer term opportunities here with this downturn that we've had in the market?
Well, we're pretty washed out. I watch Bespoke a lot and I subscribe to their stuff, and they have had some interesting statistics that when the 3-month Treasury and the 10-year Treasury invert, for 50 days, what happens is that the market's pretty much washed out, and it's happened 17 times since 1971. And for the next 90 days, we're going to be basically trading water for the overall indices. And then we'll pick up. So that means we're going to be picking up October or so. But I think any stock that has great earnings are going to be fine. So I'm still have energy. I'm loaded with fertilizer. I have plenty of food stocks. I love my chicken stocks. And then also I have still have some of the shipping companies because they're low PE. They throw out these huge dividends. They don't know what to do with all the money they're making. I know the rates are down, but they're still reaping windfall profits. And then I have a lot of specialty semis that are still in high demand. So I'm very comfortable in this environment. I think it's a more narrow market. It's a stock picking environment, but earnings. I've been doing this 40 plus years. Earnings do work, so I'm looking forward to the next 3 weeks.
Definitely, that's one thing we'll keep on watch. Thank you for coming on, Louis. I'll definitely have you back on. Louis Navellier, chairman and founder of Navellier's Associates. Definitely check him out and give him a follow. Appreciate you for coming on today, Louis.
Take care.
All right, there you guys have it. Not only 1, 2, but 3 experts today, bringing them on. I hope you guys enjoyed that. We had a great show. We talked a lot about all the topics. I'm surprised I was able to get to all of them. But what did we touch today? Let's go ahead. Let's do a little recap here. We talked about stocks in limbo, what was hot and what was not today, crypto news out there, or maybe lack of crypto news. They're looking for them. If you guys know where the hedge fund owners are, let them know, because I think they're still looking for them in court. We'll keep watching what happens there. USD and the euro, what's going on there? Will we get the parity? Pepsi earnings, we talked about that just coming on. We talked a little bit about Peloton, what's going on there with their third-party manufacturing. Walmart, Gap, and Rivian. We touched Boeing all in today's show. That's what this show's all about on Stock Market Movers. We touch the headlines that you guys want to see and get to the expert opinion to keep you guys in the informational edge. Last thing I'll do is I'll take some stocks from the chat. If you guys got something you want to check on out today, not bad. I'll definitely go ahead and do so myself. Let's take a look here. What is moving right now and how's our SPY doing? Looks like we're right now at 384. Will we stay into the range today? I actually drew these lines really early on. There's 386.16 and 381.10s down below. Will we get out of the range? Right now, we're trading just kind of sideways in this range. This is why I've been trying my best not to trade once we get into sideways. A lot of what we've been seeing is quick momentum right out the gates, then a turnaround. And so I've been trying my best to not be trading in during the chop time, because this is definitely going to help you just not give up trades. And then when you finally see the momentum move, you can't trade because you used all your capital. So capital preservation right now is definitely the most important thing, I think, in a down market environment, in a bear market, which it seems like we're deep in. All right, GOEV outlook. Let's go. Let's take a look there. I've been talking about how I've been wanting to get down there towards the 374, the 365, but I do think this could come back by the end of the day, if not tomorrow. So keep this one on your radar. Right now, it's at the 395 level. We saw it push there right out the gates there towards the 5. I had a feeling it would turn around, so I wasn't trying to play it through the 5 there. It retraced there to the 38.2% retracement on the fibs, but couldn't hold there. So now you're back down closer towards the 50. I'm looking for a move back down below the 375s. That would get me interested in watching a stock like this, but we'll see what happens there. Last one I'll do is I got a couple more minutes here. I got HTGM mentioned here. Definitely cheaper names, but I don't mind. I don't shy away from these. I've been talking about how you were holding this hourly trend. That's how I had that line drawn here. Let's see if you can hold that pullback. So I would look for a hold around the 150 areas, making sure that's holding there, and then getting a move back up through the 168s into the 170s, trying to make a move back to $2. Let's take a look at the daily chart. Where can you run into resistance? I had that 168 drawn. And then from there, you can see how you can get above the $2 on the next level. Let's just see if this pullback can hold. If not, it could come back towards that 136 first, as you have that kind of topping out harmy look here. Let's see what happens on HTGM moving forward. TAP, sell the rip. Well, I mean, do you really think that soft drinks are going to take off, or brewers are going to take off? I would be a little bit interested there because look how this has really retraced over the last kind of year. And Sam's is having a decent day, bouncing back. TAP is up too. TAP is the only one that I would say, at least on the daily, it's been strong. I talked about it when it got through the 50 here, and I thought it was a very important level. We've been looking at this since February 23rd is when we saw this kind of break above there. Right there, we were at that 23rd spot. Now we broke above it and held the 50 on the pullbacks. So that's all that it needs to hold right now. The big thing is, can it get back above the resistance and really take that next leg up? Where's that next leg take us? I think it takes us up there to the 61, maybe the 65 area. So I do think that this is moving well right now, but it's all dependent. Are you taking it on a day trade? Are you taking it on a swing or a long term? I think it's going to be dependent on your long-term outlook or how short-term you really are. In my eyes, it's still a bullish chart here as long as it can keep holding the trend that it's doing. So it doesn't look bad right now. And how many stocks do you see where the 200-day is below it, giving us that bullish sign, and the 50-day is below it? There's not many stocks. Like, look at Sam. Look at the difference. Look where the 200-day is here. It's super extended from that 200-day moving average. That just shows me that TAP has the relative strength. Let's see Budweiser has a 200-day above it. The 50 days right below it. So a move above 56 would be good, but still in a bearish trend because it's not doesn't have the 200-day below it. It has a 200-day above it. All right, that's going to do it for me, guys. I hope you guys enjoyed today's show, getting to 3 experts and covering all the headlines out there in the market in 1 hour. That's what it's all about here on Stock Market Movers. I'll see you guys tomorrow. Hit that thumbs on up before you get on out of here. Got to keep going. Let's go. Let's go. Like those likes on up. Drown me in those likes before we get on out of here. I'll definitely see you guys tomorrow. Hit the subscribe before you get on out of here if this is your first time on Benzinga so you can be notified the moment we go live. I'll see you guys next time. Smash it up and catch me on At the Close at 3:30.